Industries that are hot, sectors set to outperform the market. That's what's here in Zach's Industry Rank Analysis. Well, commodity prices may be on the rise, but things are not all copacetic down on the farm. How'd you like that for a lead-in? Charles Ruppelt, our senior market analyst at Zacks.com, is here to kind of fill in some of the blanks for us. As on the radar screen this week, he looks at the fertilizer companies. So what exactly is going on?
Well, there's two things. First of all, there's a lot of merger news going on, or really news about potential hostile takeovers, and that's kind of helped support the stocks, and that's grabbed a lot of headlines. Specifically, most recently on Monday, we had CF Industries come out and say they bought a 7% stake in Terra Industries over the last 2 weeks. CF Industry wants to buy Terra Industries, and they're hoping buying this extra stake in the company will help make their cause better and allow them to actually close the deal.
And those are a couple big players in that space.
There are a couple big players on there, and actually Terra Industries, sort of a poison pill, for lack of a better word, actually announced a special dividend of $7.50 a couple weeks ago. So a lot of little cat and mouse games. We have that going on. We also actually have Agrarium wanting to buy CF Industries. So we've got, kind of a weird love triangle going on here with with three scorned lovers is probably a good way to describe it. So we have all this wrangling going on, and that's what got everybody's attention. And people are thinking, well, a merger is going to happen. I want to stay in these stocks in case one of the deals closes. But what all this merger talk has done is overshadowed a very negative trend, and that's falling earnings estimates. And this is not just recent. We did have Potash warn earlier this month. They cut their guidance. That caused a renewed round of estimate cuts. But this has been going on before Potash's warning. In 2007, 2008, I talked a lot about the fertilizer stocks. They were soaring. Business was good.
Right.
Now that's not the case. We're actually seeing demand for fertilizer, for phosphates, for all the things that you actually, potash, all the ingredients you use for fertilizer, they're all declining. It's really a matter of not so much that there's something wrong with fertilizers, there's something wrong with the farms themselves, and not wrong with farmers. I want to make that clear. We're very pro-farmers.
So what changed?
But it's demand, what the farmers' demands are saying, and supply. Well, what changed is that we had oil booming. That spurred demand for ethanol. We also had this worldwide economic growth. That spurred demand for food. If you recall, in 2008, we kept hearing about food shortages. And when's the last time you saw a headline about food shortages?
Right.
What changed for the farmers is that they had they had really good weather this summer. At the same time, demand for wheat, for corn, dropped. Even demand for soy dropped. So as a result, you had these farmers with bumper crops that they couldn't move. In fact, I saw a news article earlier this week talking about how wheat silos are packed and how they don't know how they're going to handle the harvest this year. So if you're a farmer, you went from very good times to a position where you've got these bumper crops and really no buyers for them. And so
they're going to be left with a lot down on the farm.
Right. And so if you're a farmer and you're worried about what you're going to do with your crops, you're not going to spend a lot on fertilizer, you're going to spend less on seeds. All that's bad for the agriculture companies.
Yeah. But is there a bright side to the M&A activity going on in this space?
Maybe. I think it's a question of whether or not it will be done. The latest news is that Terra Industries is reevaluating CF Industries' offer. We'll see what happens. Agrarium's offer for CF Industries expires October 22nd, and maybe that all this merger news fades away and nothing happens. And that's one important lesson for investors is just because there's a merger offer on the table doesn't mean the merger is going to be done. And even after both companies agree to complete the merger doesn't mean the merger itself will be done or the synergies from the merger, even if it is completed, will be realized. So to invest strictly off of merger news is really risky. And I personally tell people, if you own a stock that's being offered to buy out, consider taking some profits. At least take a good portion of your holdings, take the money and run. If you want to hold on a small portion and see what happens, that's fine. And then I think for long-term investors, obviously there's a very good long-term outlook for fertilizer stocks. People are only going to eat more. The supply of oil is only going to go down, which will increase demand for ethanol. But when you look at the cut in earnings estimates, right now it's a pretty lousy time to be holding on to these fertilizer stocks, especially since they're being propped up by the merger news.
How is this situation here going to impact commodity prices or commodity-related stocks like food stocks further down the road?
Well, I think down the road for the food companies, we might see a reversal. Right now, things are really good for the food companies. Like General Mills just had some very good guidance, whereas the fertilizer companies are cutting guidance. I mean, I think you look out 3-4 years out down the road, it could be reversed where, again, we start seeing the fertilizer companies and even some of your other agricultural operations companies such as Monsanto, doing fairly well, whereas you start seeing the food companies being hit by higher commodity prices. So, one of the lessons for people right now is to enjoy the relatively cheaper prices you're seeing at the grocery store right now, and stay away from the fertilizer stocks, but understand down the road that situation's going to be reversed. But what the Zacks rank is telling us right now is stay away from the fertilizer stocks and take a look at the food companies. That's the better investment play for right now. And obviously in the future, that will change.
All right, Charles always has his eye on these ever-changing dynamics in the different industries that he spotlights for you each week here in this analysis. And so if you're watching this video from outside of Zacks.com, you can see the text version of this piece and actually get more of the detail behind these mergers that he was outlining for you here. Off of the Zacks.com homepage is where you can link to it. Just go to Zacks.com's homepage, scroll down until you get to the industry rank analysis headline, click on it, it'll take you right to his latest piece. With Charles Rotblatt, I'm Terry Ruffalo.